I am.
Stand by. Stand by. And I'm going to need a cue before each one. You give me like something to let me know your
Yeah.
questions. All right, here we go. We're live. Let's count her in. 5, 4, 3.
Good afternoon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and this is Nasdaq's Boardroom Trivia. This is a show that we shoot monthly. We focus on different topics, and we also do some social trivia, and we also report on the answers. Joining me is TK Kerstetter. He is the host of America's Boardroom. We film that weekly over at the Nasdaq Market site. Thank you very much for joining me today. I love today's topic, age diversity and bringing in the next generation of board leaders, and I want you to explain to us, why is it so relevant today?
Well, it should come as no surprise in what we've seen happening at companies. Today, there's oversight responsibilities for things like e-commerce, digital marketing, cybersecurity. These are all topics that a 60 and above probably has not had to deal with in their business career, okay? So all of a sudden, the investors want to see faces around the board table that understand these topics a little better. And they aren't asking for, have a whole board of young people that don't have that experience, but they are asking for sort of a spread, a mixture of ages, okay, and tenure on the board. So that's important. So we had recognized, along with Nasdaq and Spencer Stuart, about this, and Spencer Stuart is one of the world's largest board recruiting firms. And together we sort of recognized this trend happening. And we wanted to get ahead of that, so we actually formed what was called the Next Gen Board Leaders, which is a group of 10 very savvy existing board members between their 30s and 40s who are currently sitting on boards and who are helping us sort of bridge the gap from that age group and the millennials and whatever to existing board members who obviously are much older. So it's exciting, and it's exciting to interact with these people that are so young and vibrant.
Right, and they're full of great ideas to certainly bring businesses into the next generation. So let's kick it off and go into the trivia questions, because I learned a lot just from reading them myself. Yeah. So let's go to the first one. True or false, the average age of an S&P 500 board member is 63 years old, which is higher than a decade ago. And the audience was pretty good on this one. 74% of them got it right.
Hooray for the audience. And first of all, let me say that this information was gathered from the Spencer Stuart Board Index, okay? So they do a study every year, and that's where we got this information from. But yes, a good part of our audience was correct. The answer is true. And you might ask, after all I just talked about, how can the age be going up? Because 2 years ago it was 61 was the average age. Now it's 63. If younger people are going on the boards, why aren't we seeing that age come down? And we'll talk about this a little bit when we talk about question 3. But the facts are directors are staying longer, okay? And that gets to my point of tenure. The proxy advisors, ISS and Glass Lewis, are worried that people are staying on the board too long. So one of the things they look at is tenure. How many people on the board have stayed for long periods of time? So if you have a mix of ages, now in the proxy advisor's eyes, that's a positive. If you don't have any mix, you just have a bunch of older people, I better watch what I say, older people on the board, then they're going to raise question with you and want you to have better tenure mix on your board.
It's really interesting, because from an investment perspective, that's certainly something that you would take in mind as an investor, is diversity and inclusion and so forth. So this is bigger than just a bunch of...
It makes perfect sense. The only problem is, the question is, does a young person, while they may know these topics, do they have enough operating experience to be able to contribute to the other phases of serving on the board? And what we found in the next gen is they sort of do have this. They've gotten it at a very young age, and we see people joining the board in their early 30s and middle 30s.
Well, think about it. If you look at it from a technical perspective, they grew up with technology as compared to someone in their 60s. But let's move on to question number 2. Of the 345 new independent directors that joined S&P 500 boards in 2016, what percent were first-time directors? 16%, 24%, 32%, or 45%? And speaking of percentages, 62% of the Twitter audience got this correct.
Oh, well, that again.
Smart audience.
Yeah, that really surprises me because 32% is a marked increase, okay, in the number of new directors. Everybody in the past was always searching for a director that had experience, okay? How do you get experience? Somebody's got to trust you,
Right.
you know, to serve on that board. This is a great sign that this is up to 32%. That means that somebody is not going to the traditional CEO or CFO to fill a board position, that they're actually looking for other diverse candidates, other positions, women, other people of color, age, thought mixture, okay?
Right.
All that is being taken into account. And I'm pretty sure on early notice that we've received that this is going to increase significantly in 2017. So that says this is really a positive, that diversity is being brought in at all levels for bringing in new directors.
All right, and speaking of tenure, what percentage, this is question number 3, what percentage of S&P 500 boards have established 75 as their mandatory retirement age? 18%, 26%, 30%, or 39%? This one, about 29% of the audience got it correct.
Yeah, this is a tough one because it's a surprise, and that is that 39% of the audience, 39%
Right.
of directors or boards have a mandatory retirement age of 75. And this has steadily gone up. Now, you would immediately say that can't be good. People are staying longer, okay? And I would agree with that. But if you have a mixture, if you get back to our point about having a mixture with very experienced with younger people, that's probably not a bad thing. There is one good thing about this, and why 75 makes sense. Let's assume that somebody's a CEO, and more CEOs can't serve on outside boards, or they're limited to one outside board because their job is so consuming. Well, now they retire. They're a wonderful candidate for a board seat. But if the retirement age is 70, that only gives them a 5-year runway, okay? But by going to 72, which is the most popular, or going to 75, now they have enough of a runway that somebody wants them on their board. So as long as there's a mixture of ages, I think the 75 doesn't hurt in the sense of having experienced people, giving CEOs and CFOs a runway, and yet still bringing on the young and the other diverse candidates, so you have a good mixture.
Well, let's talk about some challenges that first-time directors are facing as we bring on more next-gen board leaders. What are some of those obstacles for the board leaders themselves, and also in terms of recruitment?
Well, you would think that there isn't a big deal to bringing on a younger person onto a board, but remember, in some cases, they're going to be 30 years younger than every other board member, okay? 30 years. Think of how much changes in that period. So it's not easy. You're not really always on the same wavelength, okay? Sometimes there's a feeling of isolation, okay? Sometimes there's a communication challenge. Sometimes they just don't know what you're talking about, okay? If you're a digital native that's using that language, that can be puzzling to a portion maybe of your board. So you have to recruit somebody that seems it's going to fit in, that has the experience to contribute, not just in the millennial topics, but in other topics. So all of that becomes a challenge of blending everybody together. So it's not a slam dunk.
Mm-hmm. But you know what, though, that's like any other business. There's going to be growing pains, but ultimately having that diversity opens up a number of ideas.
And that's the purpose of the next gen board
Right.
leaders. We're trying to make companies, we're trying to take these feelings and these understandings from this advisory council and translate that into something so that companies can understand, here's how I have to onboard those people. Here's what I have to do. And these are people that represent, these are young people that represent companies like Morningstar, Ally Financial, Rosetta Stone, Dun & Bradstreet. I mean, these are significant companies where these young people are serving. So they're giving their views, and hopefully we're going to be doing that. So with that, we've created the Next Gen Board Leaders website. So out of that is going to come research connected with that age director.
Right.
It's going to come suggestions. We hope to take all that information, lump it all together, have it on this website, nextgenboardleaders.com, and anybody can come on to that. They can subscribe to get the regular updates. It's just going to be a great resource for people going forward.
Okay, well, thank you very much, TK. And thank you as always for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.